CrossWallet is still set to do another 100x from where it is today. However, the last few days we've been focused on the fundamentals. Now we are going to focus on the technicals, the psychology of buying and selling. Is now the right time to buy, or should you be patient for a better buying, high probability opportunity? Well, that's what we're going to cover in today's video, the technicals. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008. Phenomenal book, by the way. Trading currencies for over 15 years. Now I focus exclusively on crypto. So let's dive straight into the technicals. So we are looking at the chart of CrossWallet. Now, look, I think it's a great project. Okay, let's put that aside now, right? That part is done. Yeah, solving a big problem. We understand all of that stuff. Now we are looking at pure psychology of buying and selling, regardless of how good the project is. So important to differentiate the two, because it allows you to act more in a business-like fashion as opposed to an emotional-like fashion. So when we first did our video on CrossWallet, it was in this region, and a lot of you managed to get some good positions in this, and we had a really nice move to the upside. But what I'm going to show you now is using Elliott wave and Fibonacci technical analysis, which literally measures fear and greed, literally measures profit taking. And we can project and predict with high probability of what's likely to occur next. So before I show you on the chart, what I'm going to do is I'm going to show you the theory first, because I do have a free Elliott Wave and Fibonacci Masterclass, which is in the link below. But I want to give you a little lesson right now before we cover the actual stuff on this actual chart. So I'm just going to pull up this. Now, you would have seen this if you saw my video on Trump the other day, and it's the Elliott Wave basics. Now, the basics is most trends unfold in a 5-wave sequence, right, in the direction of the main trend. And it normally looks something like this, right? 1, 2, 3, 4, 5. And we're looking for this. 50% of the time, it tends to unfold like this. After a 5-wave sequence, we should expect a 3-wave correction, minimum of 3 waves. 1, 2, 3, also labeled as an A, B, C. So important, so powerful. You'll see this time and time again, especially in crypto, because it's such a young market. The psychology tends to be a bit more raw and a bit more to the surface. And these Elliott Wave applies incredibly well to crypto, better than Forex, better than stocks, better than commodities. And the markets usually unfold in 5s and 3s, 5 and 3s. 5-wave patterns are impulsive. So this part of the market, so if I just move myself a little over here, I had my head cut off there. Yeah. This part of the market, even if I move here, this part of the market is impulsive. And after an impulsive movement, you have something called a correction, normally in a minimum of 3 waves. This is so valuable. I cannot emphasize it enough. You need to take this seriously, because it applies to all cryptocurrencies. I say all. You'll see these patterns around 50% of the time. So the rules and guidelines, I'm going to use this. I'm going to show you in CrossWallet how you can, because I'm reading even the announcements in the Telegram group, the Telegram CrossWallet chat. Some people are like, why is the price going up? Why is it going down? Why is it going left? Why is it going right? It's like, what's happening? And most people don't understand that there's a difference between fundamentals and technicals. Fundamentals are much more long-term, but within price movement, there's always going to be waves. There's always going to be buyers. There's always going to be sellers. That's just the nature of all markets. That's one of the beauties of having an open secondary market, and the market gets to decide the price. If they see value, they buy. If they don't see value, they sell. But we can measure that with Elliott Wave. So markets only exhibit a useful Elliott Wave pattern about 50% of the time. Really important. If the pattern's not there, it's not there. We don't force the count. So 1, 2, 3, 4, 5, we saw that, and an ABC, right? That's what we're looking for. There will be times where there is no clear pattern. So do not force the wave count. Do not force it. Do not force it. Very important. It takes discipline. Then each wave is part of a larger degree wave. What the heck does that mean? Well, the markets are always contracting and expanding, right? Contracting and expanding all the time. And whatever wave count we have, there's one wave count above it. And whatever wave count we have, there's also tends to be one below it. What the heck does that mean? Well, if we can see this here, hopefully you can see, I think you can see most of it. This is a 1, 2, 3, 4, 5, but this green line is the larger degree wave count. And it says a wave 1. You might not be able to see it on the screen here, but it says wave 1, wave 5 of a wave 1. And then this second green line down here says this is a B, C of a wave 2. If you haven't done my free Elliott Wave and Fibonacci Masterclass, I cover it in a bit more detail, a bit slower, and I do have other courses that break this down into bite-sized chunks. But when you see these identifiable patterns, it allows you to control your emotions, to see what's happening with the buying and selling. Because if you bought at a certain price and it's gone up, and then it's come back down, and you kind of like have no idea on the psychology of buying and selling, you're like, oh my God, should I sell? Should I buy? Did I buy too soon? Did I buy too late? Oh, maybe CrossWallet's not a great project. Maybe it is a great project. Maybe it's going to fail. Who's the Bluezilla team? Are they backing it? Are they not? And it's just like, hey, calm down, relax, right? We just need objective mechanical information because otherwise we're going to act like amateurs. So each wave also has a lesser degree wave count. So over here, we've got this wave 1, we've got this wave 2, and these break down into smaller degree waves. So wave 1 tends to break down into 5 mini waves, right? And then wave 2, and this is important to know, wave 3 breaks down to 5, wave 4 minimum of 3, and wave 5 again up here, 1, 2, 3, 4, 5 over 1. You're like, what has this got to do with anything? Well, this is what we're going to jump into now. So we've got the theory, right? This is the theory, and I want to use this as a benchmark. So you know there's method to the madness. There's not just random lines that we're drawing and doing random counts. I've seen people do random counts on YouTube. There's some technical analysis, and it's like it's just not that great. So I want to make sure you know there's really clear rules and guidelines. So when I'm looking at CrossWallet, right, we're looking purely from a technical standpoint. This is a 4-hour chart, right? But you can see there's waves, right? You can see there's a movement up, there's downward movement, there's this big upward movement, there's been a recent down movement, and you might be thinking, what is going on? Why are people selling? Why are people buying? What is happening? Well, most markets, and all markets in fact, stocks, currencies, commodities, crypto, you name it, real estate, property, are driven by speculation, fear and greed. Fear and greed. Often it's correlated. If there's good news announcements coming out, then that'll correlate with more optimism and then more buying behavior. If negative news is coming out or there's something not going so well, that leaves less confidence, so people start selling. And then there's just pure traders, investors that are just looking at the chart patterns, don't really care. Like when I used to trade currencies, hey, I didn't know much about the countries. I was doing different pairs and different country pairs or different currency pairs. I was just looking at pure technicals, and this applies so well to crypto. And most people miss this. Most people kind of getting too caught up in the fundamentals. The fundamentals are important, more so when the price is like down here, like very, very low market cap. But once we start getting these moves, you can start reading the patterns. So let's now just get this really, really practical. So we've got this. Just take a mini snapshot, maybe take a screenshot. You know, we want to look at this. This is the typical textbook Elliott wave patterns that tend to unfold time and time again. Can this help us to see where is CrossWallet, if anywhere, in this sequence? What's likely to be occurring based on the information that we have at hand? Well, let's look at this. What do you see? Well, we've clearly got this move up. We've got this nice correction to the downside. Bump, bump, bump. And then we've got this next move up, right? So if we put it into this context, you probably have figured it out, right? You go, hang on, Jagir. That kind of looks like a wave 1, 2, 3, right? So what should we anticipate next? Well, you guessed it. Yeah, a wave 4. Then what should we anticipate? Well, a wave 5. Then what should we anticipate after the wave 5? Well, an ABC correction. Then the big question is, well, what happens after the next big ABC correction? You tend to get the next expanding wave, and then this whole part of the market is 1, 2, 3, 4, 5 becomes a wave 1 like this. And then the green line is the wave 2, and then there's the bigger wave 3. And that's where the market expands. Hopefully that's making sense, but I want to make this practical for you because I'm listening to your emotions. Yeah, I can hear them. I can hear them in all Telegram chats, whether it's the CrossWallet chat, whether it's my own private Telegram chat. Because we've got a private group. You know, if you buy one of my courses, you get an invite to my private Telegram group, so you get premier access to this kind of content before it goes live on YouTube. So I'm just going to draw this out like this, just so you're clear on what I'm seeing, right? We got this wave 1, wave 2. I know it's not clear. Everything is difficult before it's easy. But here, now that you're looking at it like this, you're probably seeing, okay, that actually makes a bit of sense, because we're looking at the theory and now we're looking at the practical. Okay, now you've drawn it like this, Jiggy, it makes a bit more sense. And then I've put a question mark here. In fact, we can remove the question mark because we've had this amazing bullish movement, right? In the grand scheme of things, this is tiny, but when we zoom in, it looks big. And then we want to put a question mark on the three, right? I'm gonna break this down for you, because investing in anything is a business, right? We don't do certainties over here. We just do probabilities. Probabilities, never certainties. And we always want to know that we want to hope for the best and plan for the worst, but we can get information that helps us. So I'm going to show you something very, very powerful. Like, it's going to blow your mind. This is unreal. So in my Elliott Wave and Fibonacci Masterclass, which is in the link below, take it for free, and you can buy some of my courses. They're on discount at the moment. Is I show you how to combine Fibonacci ratios with Elliott waves. Most people are not doing that. Most people are just using Elliott waves by themselves. By themselves, not that useful. But when you combine this, I did this in advance, right? If you measure this wave 1 and you project it forward from this wave 2, this is called a Fib extension or an alternate price projection. The typical wave 3 zones is 1.618 to 2.618. But these are two typical zones. But look at this. This would have been in advance, by the way. Like, the market would have looked more like this, right? Like this. And then we know this is a typical wave 3 zone. But look what happened. Look how bullish this was. It went to the overextended target, and almost like a magnet, almost like perfection. Just, bump over here. And then from here, it just went straight to the upper target, right? Like magic. And it found resistance at this psychological number, because human behavior is human behavior. Fear and greed is fear and greed. So this is measuring speculation, is measuring how humans are feeling, how you are feeling. And I can hear how you're feeling. Those people that bought down here, like, they're happy, right? They're 2, 3, 4x up. People that maybe missed the ride are gonna wait for the next dip. So what's happening? What happens next typically after a wave 3? Well, it's a wave 4. So again, we're going to quickly bring up the theory. Wave 4, this part here, wave 4. Wave 4 is a typical profit-taking wave. So we should anticipate wave 4, but there's some clear rules. Wave 4 should not trade into the region of wave 1. So it should not go lower than this point, right? That's just the textbook Elliott wave theory rule. Like, if this is a wave 3 high, it should not go below this high over here. So we know the absolute low is to test the 0.023. But that's still just a bit loose, right? What we're going to do now is I'm going to take into account the lesser degree count to help us. What are you talking about, Jiggy? Well, remember I said waves 3s break down into a 5-wave sequence, right? This here, this yellow part of the wave 3. Does this wave 3 kind of break down into a 5-wave sequence? Now, you may be able to see it or maybe not be able to see it. But again, we can debate it, but it helps if we can see it. And there's a couple of things that give this wave 3 high a bit more of a higher probability there is a wave 3 high. And I'm going to show you. Look at this. You got this nice wave 1, ABC over 2. We got this wave 3, almost like a tiny little 4. And then this 5 over 3. Right, hopefully that's kind of making sense to you. And we could do another price projection. Right? Again, we'll normally do this in advance, not that much use to us right now. But I'm just going to show you that it tends to apply time and time again. Look at that. Oh my God, look at that. Right at the top. Look at that. That's just perfect, right? So now what you'll see is that's a cluster. I'm going to show you this again, because I don't know if you've taken the time to take my free Elliott Wave Fibonacci Masterclass, but it is the bee's knees. I'm telling you, it took me years to learn this stuff, and flying all over the planet. Planet Earth. But look at this. That's the zone that we would have projected in advance, right? So this tells us this is a very highly probable wave 3 high, right? So I'm going to just put this here, boom. And there's a wave 3 high. I'm taking my time with this because you may have got in and you're feeling very emotional right now. Either you're like, wow, I've made some good profits, but the price has started to move down. I don't want to lose my profits. Some of you may be, geez, I bought at the top of the market here and now it's going down. Should I sell now and cut my losses? And it's too amateurish, that behavior, that thinking is too low level. We need to increase the level by increasing your skill level. And that's what I'm here to do and help you with this. So let's just now go, okay, Jagir, telling me this stuff. What are you seeing? What does Elliott wave theory tell us? Well, after a wave 3, the most common typical retracement for a wave 4 is we can measure the wave 3 itself, this whole wave 3, we can measure it from this low to this high. In fact, I'm going to do it from the side over here just so it's a bit clearer. This low to this high. And wave 4s, are more of a profit-taking wave. But after a bullish, especially an overextended 2.618 wave 3, that's indicating to the market the trend is reversed. The trend is up. This is the biggest move that CrossWallet has seen to the upside in a long while. And I've been reading some of your comments in the CrossWallet Telegram, which is, I'm getting rich, finally, yes. But we want to be really objective and mechanical with this part. So the two main retracement zones for a wave 4 is 38 to 52%. Also, most ABCs of a wave 4 tend to complete in the former or the previous wave 4 zone, which is here. So again, we're on probabilities games over here, guys, not certainties. So the likelihood is we're going to get a correction in this kind of price zone down here, right? Somewhere down here. And then if it does unfold like this, and we're going to break it down, then after a wave 4, well, what should you expect? Well, if you just go back to the theory and go, well, after a wave 4, it seems to be a wave 5. And after a wave 5 seems to be another big ABC correction. So I'm personally anticipating, again, never guaranteed, we're just going probabilities over here. I'm personally guaranteeing, I'm not personally guaranteeing anything. I'm personally expecting a wave 5 after the wave 4. Now, this is the part I want to focus on today. I mean, the main part. The main part I want to focus on today is this, because it's gonna it's gonna panic a lot of people, right? If you're not used to looking at chart patterns like this, and there's a method behind the madness of why is the price going up, why is it going down? If any human being is going to be the same. So this is where I want to give you a bit more logic, a bit more thinking. So what we're going to do next is we're going to just finish up on this, right? Just want to make sure this is as clear as I can get it. All right, how many waves should a correction be? Well, it should be a minimum of 3. Minimum of 3. How many waves have we got at the moment? Well, it was 1, right? We got 1 wave, right? That should be quite clear to see. So what should we anticipate? Well, we should anticipate another correction to the correction, which is often called a wave B, and then another leg down. And it may just coincide that the technicals and the fundamentals do actually coincide. Why? Because you may or may not know that on the 21st of October, I'm pretty sure you're aware of this because I've seen you guys talk about it. 21st of October, there's 33 million tokens unlocked from the CrossWallet IDO. Yeah. And then you go, well, what does that mean? That sounds like a lot. Well, what's today's price? Today's price is, what do we say is, where's today's price? Today's price is, so right now is 0.038, right? So if I just pull up a calculator. So I'm doing it this way just because I want to keep it very, you can tell there's no hype over here. It's just black and white, right? Black and white numbers, right? We're going to go, okay, if there's 33 million tokens being unlocked, which sounds like a lot, times 0.038, which is today's price. It's around $1.2 million worth of tokens. Is that a lot? Is that a little? Well, we can actually jump into CrossWallet. Let me just see if it can jump into CrossWallet. Yeah. we want to go to CrossWallet. Where are we? CrossWallet. There we go, CrossWallet. 0.037, but the volume, the daily volume is roughly around 1.5 million. 1.5 million. So we might get a bit of sell side pressure, when the token unlock happens. So it's what did we say it was? 1.2 million at today's price. 1.2 million. Let's just call it 1.2 million dollars. I'm doing it this way just because this is an emotional game, right? Especially if you're not trained, it's naturally emotional, right? So you got on the 1st of October. So right now is the 18th, and 9 a.m. 18th of October UK time. But the 21st of October, we've got 33 million tokens being unlocked. Value approximately 1.2 million. So it's not that much. Yeah, keeping in mind, someone gave a great stat. I think it was in my private Telegram group that said I think there's 500,000 people on CoinMarketCap watching CrossWallet, right? So what are a lot of people waiting for? Well, a lot of people are waiting for this unlock, right? The token unlock, because they're expecting a bit of a dump. But where should we expect the price to go to? Well, because it's such a strong project and the recent price move, and a lot of people would have missed this move. So they're like, hey, if it pulls back, I will take the next opportunity. That's just psychology of buying and selling. So what I would anticipate is this kind of move, another move to the upside, another move down, and then the correction to finish around 0.035 to 0.032, as low as 0.029, thereabouts. It shouldn't go below this point, because it's just not enough. People are looking to buy more, looking to buy for the first time. So here we go. So then, last but not least, let's just wrap up with. No, I think we'll finish on this, right? Because the main thing I want you to kind of get across today is there is method to psychology of buying and selling. And if you're not buying into that, just think, how are you feeling? When you saw the price going up, how did you feel? Did you feel euphoric? That's because you've held tokens and the price shot up. Or if you didn't buy and you saw the price go up, or you didn't buy as much as you wanted to, did you feel like you missed out? Fear of missing out, right? That's fear and greed. That's what drives the markets. And the crypto markets in particular are exposed to retail investors, which are not trained, right? Like no one trains people to read the markets like this. It's not, you don't get it in a school course or a degree level kind of thing. You just have to learn it yourself. So there you go. Hopefully that makes sense. So what we're anticipating, let me just finish with this. And we put a wave 4 down here. But the main thing I want you to get across today is purely technicals. The other first video, I think we did, I don't know, 5 days ago, whatever it was mainly actually purely fundamentals. Product, problem solving, team, reach, comparing it to another project, etc. But here, we're just going, it doesn't matter what this is. Doesn't matter. Just forget that it's CrossWallet for a second. We're just looking at the chart and going pure psychology of buying and selling. This is what's likely to occur next. Whether you like it or not, whether you're long or short, whether you're waiting for the price to go up or down, hey, it doesn't matter. This was likely to occur. But then also just keep in mind, actually, I am going to finish with this. I was not going to do this, but I'll do it anyway. I'm going to do it like this. What will tend to happen, again, it's not guaranteed, just if it unfolds like this, we'll tend to get another wave up, which will be a wave 5. Then we'll tend to get another bigger correction of like a A, B, C. And you go, how are you deducing this, Jagir? Where are you getting this information from? And I go, well, I'll show you. Do take my free anyway in Fibonacci Masterclass. It's in the link below. I put in a lot of work to simplify this very complex topic. But I'm looking at this. Look, 1, 2, 3, 4, 5, A, B, C. But we're seeing it live unfold in front of our very eyes. And you are feeling the emotions. You must be feeling the emotions because you're human. That's why you want to have a plan, prepare it in advance. So then what happens? I'm going to do this. I'm going to do it just because It's on my mind. I'm gonna do it. And then we go. Remember, we said in the lesson, I can get rid of this now. I said there's a degree count on a higher and a lower degree count. So I'm gonna do this for you. I'm pure forecasting here now. This is not that useful to us because it's too far into the future, and it doesn't mean it's going to unfold like this. It just means it's highly probable. But I want to just show you the lesson. The lesson here. The lesson is more important than the actual, just focusing on CrossWallet or this particular project, right? So whether you're a fan or not is like, look, we just want to know what is likely to occur. So now we've got this full sequence, right? We've got this nice move to the upside, 1, 2, 3, 4, 5, yet to be confirmed, obviously. And then we've got this A, B, C. Then you go, well, what tends to happen next? What should we anticipate next? That's a full ABC sequence after a 1, 2, 3, 4, 5. What happens next? Well, this is what I was trying to get across with this one. I'm saying when you get in the blue, 1, 2, 3, 4, 5, there is a larger degree count. Is a 5 of a what? Well, this is actually the first move to the upside. Like if you look at CrossWallet, this is closing day data. If I change it to a bar chart, you'll see that there was a massive spike on that first day. It was just going down, down, down. But this is the biggest move to the upside. So there's been a clear trend reversal. So we want to take that into account. And then you go, okay, what are you going on about? What's likely to occur next? Let me change the color of this. I'm going to change this to green. Right. Then we are likely to get a wave 1. You go, what? You go, what? Wave 1? I go, yeah, wave 1. Let me show you. Here we go. I'm going to change it to green. Yeah, that's fine. Wave 1. This is high level stuff, but you can see it's relatively simple once everything is difficult before it's easy, but it's relatively simple once you kind of get it shown to you like this, right? This is how my course is, by the way. I've just broken it down into real layman's terms, real clear cut patterns. So now what we're looking at is 2 degrees of counts. Again, I'm total forecasting here. So there's more the bigger lesson. I'm kind of showing you how the theory tends to unfold. Now, it doesn't mean it's going to do this. It just is highly probable. So then if we can anticipate and take the information, there's some other things like the momentum indicators we can take into account and a few other things. But what I want to show to you is after the next correction, if it occurs like this, well, what do I anticipate next? Well, if this is a wave 1 over here, and there's a wave 2 down here, well, what comes next? Well, we can go back to the theory and go, well, in the blue, it says a wave 3. Well, obviously, because, after 2 comes 3, right? And then we can do this. I'm going to do this just for the fun of it. We can actually project with high probability in advance what are those price targets. Well, the typical wave 3, like we did before, but now on a larger degree, because the market is expanding, are these 2 zones. Look at this. Bang, bang. What are the price targets? I'm short-sighted, guys, so I need to lean forward. 12 cents to 18 cents is the next cycle. Then you go, all right, Jagir, well, what would you expect next? Well, I expect another wave 4, and then a wave 5. Boom. And then guess what? Then the question is, okay, if this was now a bigger degree, 1, 2, 3, 4, 5, then what do you expect next? But then we expect a bigger degree, A, B, C. Then you go, well, what comes after that? Well, it depends if the market's contracting or expanding. Then it's like that becomes a wave 1 of a wave 1 of a whole new sequence, right? And that's the whole principle of Elliott wave. The markets are always contracting and expanding, and the money is flowing in and it's flowing out. And that's where you need to train yourself and sharpen your axe so you can get used to dealing with the ups and the downs of the market. So I probably went into a lot more detail than I was anticipating. But there you have it. So CrossWallet is still set to do 100x, but I would anticipate a bit more of a pullback, over the coming days and weeks, especially we've got the 21st unlock date, 33 million tokens. I don't think that's such a big deal because only 1.2 million in value, and that's like the daily volume, and probably going to be 20 to 50% of people selling, and then there's going to be a whole herd of individuals looking to buy the dip, looking to buy the dip. So then we should see the surge to the wave 5, and then there's going to be a lot of people in profits. Then we see an ABC and so on and so forth. So how did you find today's content? Today was real theory plus the practical. We did pure technicals today, pretty much no fundamentals, pure technicals, whereas the previous ones across CrossWallet were pure fundamentals and no technicals. Right, let's finish on a quote from my book, The Extraordinary Venture Capital Opportunity. Because we're thinking like a venture capitalist. We're trying to go, decrease our risk, but we're trying to get some real high upside potential. So we are on chapter 4. The quote of the day is Benjamin Franklin. He who is good for making excuses is seldom good for anything else. He or she who is good for making excuses is seldom good for anything else. Benjamin Franklin. Now, the way I understand that is the way a person does one thing is the way they do most things. So just be careful of the words that you are speaking, because you can speak things into existence. We were shown with neuroscience that we actually operate 95% unconsciously, and there's these universal forces that apply. Some people call it the law of attraction, some people call it God, some people call it spirit, some people call it, I don't know, karma, right? Whatever you want to call it. But what I learned when I was working with a lot of individuals and mentors with the unconscious is whatever's on the unconscious mind happens. So the way a person does one thing, they are unconsciously programmed to do most things. So just be mindful of your own words and catch yourself making excuses. But here you've got some real practical information on Elliott wave and Fibonacci, technicals to measure the psychology of the market. Take my free Elliott wave and Fibonacci masterclass, because I just show you how to do the real core basics. Then you can apply those yourself. And if you like it, I do give you opportunity to buy a lot of my courses. I've got 2 at the moment. One's just Elliott wave, one's Elliott wave and Fibonacci price, and then running at a huge discount. And if you join, you'll get invited to my private Telegram group where you get premier access to this type of content. So like, subscribe, hit the bell notification. I appreciate you, and I will see you very soon.